On behalf of the Tools for Life Learning Center at Loudoun Habitat for Humanity, I would like to welcome you to today's virtual workshop on preparing for the 2020 tax season. My name is Amanda Bollig, and I'm the Programs Project Specialist here at Loudoun Habitat for Humanity. I oversee our home repair program as well as the Tools for Life Learning Center. We're going to get started with just some of our goals for today's session. The first thing we're going to talk about is some of the basic tax information that you're going to need to know when you're filing your taxes this season. This is going to help lay the groundwork and answer some of those common questions that you might have about filing taxes. Then we're going to jump into the benefits of using a tax software program and how easy it is for you to use. And then we'll wrap it up with some of the possible effects that COVID might have on this upcoming tax season. Joining us today is Ken Shipp. He is an enrolled agent, which he will explain a little bit more about what that means. This is the first time Ken has presented with us, so we are very excited to have him, and we are really excited to see what he's going to teach us today. So Ken, thank you for joining us. If you have questions for Ken during the course of the presentation, use the chat box, and then we will try to answer as many as we can at the end of the session. So Ken, I'm going to pass it off to you to explain a little bit more about yourself, and then we'll jump into your presentation.
Great. Well, I'll start with the disclaimer first. Topics discussed today are only meant to provide general information and do not represent the views of IRS, the Loudoun Habitat for Humanity, or any other entity. And I'm one of those other entities. I'm an enrolled agent, which means that I am certified to practice before IRS, as are CPAs and attorneys. And we get an enrolled agent certification for taking a test for IRS and keeping up with the courses every year to maintain that certification. So let's go through. Thank you, Amanda. And I will start with some of the basic information that people need to file. Names, birthdays, very important for lots of things. Social Security numbers, W-2s and 1099s. The W-2s and the 1099s are the income sources, and that's the way we're going to go. We'll talk about the income sources, and then we'll go into deductions and credits. So first, people I think know about W-2s. You're a wage earner. It's a pay-as-you-go system. So you get your W-2s, their taxes withheld from your W-2s for both federal and state and any other deductions you have. Pretty simple. The 1099s are everything else that's out there that winds up being income that's reported to you. And here's your first assignment, is to get a folder. Once this is over, get a folder, title it 2020 taxes, and put everything that you're going to get for the next month in that folder, because stuff is coming in. I got things yesterday, some 1099s and other documents. So once you compile all that, you've got a pretty good start on getting your 2020 taxes going. And for the 1099s, that is the biggest cause of discrepancies between IRS and what you've reported, because the 1099s are required by the end of January to be provided to you and to IRS. And almost all the audits that I've seen over the past years are there's automatic matching that don't match. So you want to make sure that you've got comprehensive and complete 1099 for interest. You get a 1099 INT for interest. You get a 1099 DIV for dividends. If you are a contractor, you get a 1099 MISC miscellaneous that will show how much income you got. And the 1099, if you get a 1099 MISC as a contractor, that is not a pay-as-you-go system. So you're going to owe taxes, Medicare, Social Security, SE type things on that. And you may have already been making estimated payments to take that anyway. We're going to talk a little bit more about that when we go into COVID, if this is your first time to have received 1099s. So I think the non-match between those two things is what's there. You just want to make sure that you've got everything in that folder. And here's another bonus assignment for you. Before you close that folder, this is the first year, well, the first year because of COVID, that even if you take a standard deduction, that IRS is going to let you take an additional charitable contribution that you made back during calendar year 2020 that was a cash contribution. It's not an in-kind or a Salvation Army type goods. But if you made church contributions or other 501c3s that you got a letter for, you're going to be able to take an additional $300 in charitable contributions on page 1 of the 1040. So that's your bonus assignment for your folder, is to find those charitable receipts. Okay, let's talk about the itemized deductions and standard deductions. So what you want to do is get all your income items together, and then we were going to try to reduce the income, the taxable income, by either taking a standard deduction or an itemized deduction. And the standard deduction is what IRS increased with some tax changes about 3 years ago. And the standard deduction used to be taken by about, roughly 60% of people. And now it's almost 90% of people do better taking the standard deduction with one fixed amount, depending on your filing status and income, filing status and dependents and everything. But the itemized deductions are for people who are, the general things with itemized deductions are your interest from, say, a loan for your home, a payment for the taxes that you might have paid for property, your state income taxes you paid, charitable contributions, or medical care. And the software programs that we have for both those standard and itemized deductions will actually cue you to enter both and then decide which one is the standard deduction or which one is better for you, either the standard deduction, which most people are taking now, or the itemized deductions, and carry that forward. So itemized, and we'll go to the next slide. So there's the big ones for the input for the deductions. The biggest one will be normally whatever you get from a statement. It's a 1098 statement that comes from the bank that shows both your qualified interest, and usually if you have any escrowed taxes for your mortgage, both of those will be there. And then your qualified charitable deductions, you should keep a folder all year for those. And just as they happen, just make sure you stick them in that folder. And then medical expenses are the big things that are in the deduction folder. Then another thing, sort of, let's go to the dependents. One of the most complicated part of taxes is dependency. Who can I claim as a dependent? And we're going to attach, I think it's publication 501 in the appendix, that has some great schematics that you can follow, flowcharts to see who can be claimed as a dependent. But the first question that you should ask before you start to that flowchart is, do you provide more than half of their support? And support is shelter, food, clothing for the most part. And then you go into, if the answer is yes to that, then you can hit the that publication 501 to see what the relationship is, ages, income levels, and then a couple other pretty big things to look for is, did they live with you for more than half of the year and under age 19? Or are they still a student, full-time student under the age of 24? And once you hit those, that's where you're really starting to look at that 501 document. So let's just take a minute and think about what a case study might be for somebody who's trying to figure out their taxes. And here we've got somebody who's working full-time, and your status at the end of the year determines your filing status. So 12/31/20, if you were married, filing joint, that's what you are for 20. So we've got somebody here who's She has a dependent, so she or he would be a head of household with a child, for a 12-year-old son, 21-year-old daughter who's a full-time student. Uh, she supports her mom, who has a minimal income. Daughter also had a part-time job at school, and the son gets after-school care. Has a mortgage, some charity, taxes paid and expenses, and also received a stimulus check, as well as collecting some unemployment benefits with taxes withheld. There are a lot of people in COVID who may have received unemployment benefits maybe for the first time in their life. So we'll talk a little bit about that too. So let me just go through some factors as you think about that. What factors might affect your return? Well, the filing status, she's at the end of the year, she's got dependents. So head of household, which is great for a better tax bracket than a single. Dependent, she's providing half of the support, more than half of the support for her son, her mom, and even though her daughter's over 19, she's still a full-time student, and she's under some of the income filing thresholds, so she will qualify also as a dependent. The other thing about the daughter is she's probably had wages. She's got wages of $3,200, but she also has taxes withheld. Since she had a W-2 job, she's had taxes withheld both for federal and state, and it will almost assuredly benefit her to file her own tax return to get money back. Anytime, even if you're under the regular filing thresholds, that you have W-2 income, it's good to file because you can get money back, and you may very well qualify for other credits that are out there that you wouldn't even know about if you didn't file. I'm a big proponent of filing anytime you got income or get those 1099s. So the daughter would file, but there's a pretty important thing here with the daughter filing is it's almost always better for the parent to take that dependency exemption. And I was just looking at the front page of the 1040 up on the in the very first, this is a draft form for the 2020 1040. It says someone can claim you as a dependent, where it says standard deduction, and the daughter should most likely check that box so that her parent can take her as a dependent. You can only get one dependent. You can't double dip with that one. And she also has the mortgage interest, and when you look at that, it's almost assuredly she's going to be better with standard deduction. I think the standard deduction for head of household this year is between $18,000 and $19,000, and that's going to be a much better way for her to reduce her taxable income than to take itemized. Now, on unemployment benefits, she's going to get a 1099-G, which is a government payment. Almost everybody's familiar with that because they get a 1099-G every year that they get a refund from the state. And unemployment benefits have the same form. They have a 1099-G that will show all the unemployment benefits that she got, which are taxable federally, not in Virginia. Virginia is one of 5 states that does not tax unemployment benefits, but they will be taxable federally. But if she's withheld taxes, and many people do not forget to include that when you start filing. I see a lot of errors that way, even with seasoned preparers. Sometimes they forget to put in the amount of taxes that have been withheld by the clients. So what looked pretty easy, all of a sudden, kind of got complicated. But there's some other things that are going on here too. Her son, 12-year-old son, qualifies for up to a $2,000 child credit. He's under 14, so that's a great credit for this person. And because he is also receiving after-school care, this person is going to get from the provider of that school care the amount of money that was spent, and you get a child care credit because you've got earned income. You just get a child care credit for that. So it looks simple. You got it in 2 paragraphs here, and then it's going to generate a lot of paper, and you're going to say, Ken, what are you trying to do to me? Well, we want you to use tax software. The tax software is going to cue you informationally for all of those types of things so that you don't forget anything. And I'm a big proponent of using whatever is best for you. We've got some links. There's free file. IRS sponsors a free file where you can go to Tax Cut, TurboTax, a lot of other vendors who are working with IRS to provide free filing for people at a certain income level. And I think it's $72,000 this year. You could get free filing. It's a basic course. I mean, it's a basic type of file that they give you. But even if you don't qualify for the free file, or you're getting too complicated for the free file, I think it's still a good investment to spend the 50 or 60 bucks or whatever these turbo taxes and tax cuts would cost, just to make sure you don't forget anything. Because the thing that I like about the software is it doesn't let you sort of overlook any credits that might be there. Like some of the credits that we've got. Let's go to the next one. Yeah. So here's some of the credits that might happen. And we were just talking before, and I forgot a good one here, that a saver's credit should be on there too. It will help you start your retirement funding and give you a credit for doing it. So there's the child tax credit we talked about, other dependents. So her mom, this person's mom, and her daughter, even though they're not under the age threshold for the full child tax credit, they still get a $500 dependent credit. There's the child care credit that you would get from the after school care. And there's a great tax credit, which is refundable. It means you can actually get more money than you put into the system. It's the earned income tax credit. And we have links to that too. And that's a great program that everybody supports. It's just give that one an absolute try, and the software will walk you through that to see if you meet the income thresholds for earned income tax credit. Tax software programs. So here's some of the tax software program things that I like. It's conversational. It just walks you through everything. And once you enter that basic information about your family, the birthdays, the Social Security, it carries that information from year to year. It checks your math, checks your logic, and it walks you through the filing. And when you e-file, it's going to get you a faster refund and direct deposit. It's much better than trying to mail. And if you owe money, you can file later, but at least you know what your liability might be. It also provides links to the state filing programs. So not only do you have a federal obligation, but you have an obligation to the state to file too. And the thing that I like particularly is there's so many credits, so many thresholds for getting those credits. Once you start entering the data, this program has the people who've worked with IRS to identify all those credits. It's not going to miss anything. And they are free for lower income families. And most of them will file, I think it's up to 5 different people. So let's say you bought TurboTax and you're filing just like this person was. And lo and behold, not only does he or she have to file for the family, but the daughter could file using this program too. And that's true whether you get the free version or you get the minimal version. Almost all the federal filing and e-filing is free, and they may charge you some for states. Some do, some don't. Just pick the one you're most comfortable with, and go from there. I've got, I guess this is an example of the TurboTax free edition. If you have a simple return with W-2 income, some interest, maybe some dividends, you're taking the standard deduction. You could do an earned income tax credit with this, which is great, a child tax credit, and unemployment income if you reported a 1099-G. It doesn't do itemized deductions, but most people aren't doing itemized deductions these days. So that's my propaganda for using software. You're not going to make mistakes if you enter things correctly. Get that folder out and use that. And it will also, COVID, let's see, next slide. Yeah, my colleagues and I got together and we just tried to think about the things that might be hitting people this year because of COVID and the taxability issues. First of all, the stimulus check is not taxable. That you do not have to worry about. And another reason for filing taxes is the stimulus check got to people because they had the addresses and the eligibility based on previous filings. So continuing to file year after year will give you an upper hand on making sure that IRS and Treasury knows where you are and can send you a check or a direct deposit into your bank. Unemployment benefit. Many people, I think we had 22 million people go unemployed back in March and April. And it's probably the first time in their lives that some people received unemployment benefits and the kicker, $600 a week kicker. And those are taxable. They are taxable at the federal level. If you've withheld some income for your taxes from those, don't forget to, as we said, don't forget to enter those. Virginia does not tax unemployment benefits, so that's a relief at that point. But the unemployment benefits are taxable. And it could be that you've changed jobs. If you went from a W-2 job and you needed to work and you took a 1099 miscellaneous income job for the first time, 1099 miscellaneous contractors, they do not withhold taxes. It's not like a W-2 or pay as you go. You just get a straight check without anything taken out. So some people might have decided to withhold. You can make estimated payments, and many people who only have 1099 money jobs make estimated payments every quarter to cover their tax liabilities as the year goes along, rather than try to come up with all that money at the end of the year. So you should think about that if that is one of the things that you're going to do. The 1099 miscellaneous, you become a self-employed person with the Schedule C, and you're going to have to do an SE, and there's no way you're going to do that correctly without a software program. It will also a software program will also queue on potential ways to reduce your income by the expenses that you might have incurred, such as transportation, equipment, materials. Software will walk you through the best way to maximize your deductions on a self-employed job like a 1099 contractor job. And then if you were working in Virginia and you took a job, let's say over in Frederick during this time, and forgot to tell the payroll people that you've changed venues, you may have had, instead of having Virginia taxes taken out for your job, say in Frederick, you may have had Maryland taxes taken out. So the first thing to do would be to go to your personnel people and your payroll people and say, oh, by the way, I'm a Virginia resident. Don't tax me on Maryland because we have reciprocity. It's Virginia, Maryland, and DC have reciprocity on taxation. And I've run into this before too. This is not a newbie thing. I went from DC to Virginia and just assumed that they would start taking out Virginia taxes, which they did not. So you will have to file both states to sort of balance this out. So Maryland will give you your money back, but then Virginia you'll have to pay. So that's just kind of one of the bizarre things that we thought might happen here too. Let's see, big thing now, I'm just going to be a proponent again for all of our few things to just always file your taxes. I mean, IRS by law has to collect taxes and any interest due. They can also, if you don't file your taxes, you can get a failure to file penalty. And the failure to file penalties can just rack up the longer it goes on. So filing your taxes is always a good thing to do. And even if you are deficient with having that money at the end of April 15th when taxes are due, you can work with some of these taxpayer advocate services so that you can pay what you need or what you can get at April 15th, and then work with them to work out some type of plan with IRS to pay off those back taxes with interest, but no penalties. So I encourage everybody to use those taxpayer advocate services, which work for you and with the IRS. They're sort of the conduit between the two to make sure that everything goes smoothly. And tax services, let's see, what do we have any more for just making sure this is great. Once you start keeping, there's that folder that you should be keeping right there. Keep copies of your returns, and especially for at least 3 years. I like keeping copies of tax returns almost forever. The supporting information for 3 years is how far back IRS could go to audit you if they wanted to. They could go back further, but generally 3 years is about as much as they ever go back. And if you're a homeowner, you can keep receipts from the purchases that improve the basis of your home forever. That will increase the amount of equity you have in the home. And it's for an improvement. If you put on a new, let's say you put in new windows all through your house, that's a basic improvement, and that increases the basis of your home. If you're just replacing a broken window, that's just a repair, and it doesn't increase the basis of your home. But get that software program. You've got a month to fill out your folder. I'm happy to take some questions, and I think for the most part, we put together what we think is a pretty comprehensive list of links for you to go to answer some of the more detailed questions that's out there. And big proponent of software and people doing their own tax preparation, because it's the one time a year where you put everything together for your financial knowledge and well-being. Thank you.
All right, thank you, Ken, for that wonderful presentation. I'm sure a lot of you have noticed that Ken was referring to a lot of different resources available for you, different website links. We've posted some of them in the chat box for you, but if you want to have a copy of all of those links that Ken mentioned, we're going to post for you right now in the chat box a link where you can download our resource document, and that will list everything that Ken has talked about in addition to some other resources he pulled together for you. So some of those things that he was talking about, using the taxpayer advocate service, where to locate information about the tax credits, all of that is going to be included on the resource document that we have just provided for you in the chat box. Ken, we have a little bit of time for some question and answer. I know there were a couple that popped up in the chat box while you were going through your presentation. And the first one kind of goes back to when you were talking about the miscellaneous contractors and some people who have picked up jobs as Uber drivers or, some other sort of contracted work during this COVID time. What suggestions can you give for them as they go to file their taxes this year?
The best thing to do is, I think Uber provides them with the 1099, so they could go to, and they're the people who would go to that Schedule C as a keep records of the expenses that you had doing the Uber driver work, and go to your I'm assuming that these people are going to get a 1099 from Uber or Lyft and not a W-2. So that for sure would be a something where you might be paying self-employment taxes, and the Schedule C and your software will walk you pretty well through something like that. A gig worker.
Okay, great. And then the next question we have, which is a little specific, but I think I might know how you might answer this or refer them to some other resources. But this person has an unemployed adult daughter who lives with her and she supports the daughter. Can she be claimed as, can the person asking the question be the head of household without taking that daughter as a dependent?
It's a great question. And I think I will defer her to publication 501. My gut is just to make sure there's some other things there that if she gets any other resources, just to make sure that she doesn't hit any other income thresholds. But if you look at Pub 501, it handles all of those types of questions about people with unemployed or disabilities or other things that might qualify her as a head of household, which would be good, probably good for her mom.
Wonderful. And I know you provided us that link and it is included in this resource document that we have available for everybody to download. And that's something that gets updated each year, correct, Ken?
It is. And right now, we included the things that were there and applicable to 2019. And even the things that are there right now, it still says draft form and this and that, but when they're updated, they will put all the new thresholds and everything in there. So IRS is working diligently trying to get everything updated for when people start filing, which is probably like going to be that first week in February.
Okay.
So to collect everything. It's another thing on timing, I should have said. Put all your stuff together, and I like to wait really until at least the first week in February, second week in February, before I really start putting everything together, because stuff will just be coming in the entire month of January. And that's why if you consolidate it all in a folder somewhere, you've got a pretty comprehensive list of everything that you're going to need for your filing. And look at your last year's tax stuff too. There's no question about that. If you've got last year's tax forms available to you, make sure you don't forget anything, and looking at the previous year's returns or the best way to say, oh yeah, that's right, I forgot about that, or I don't have that anymore.
Great. So like Ken said, get your folder ready.
Get your folder ready.
All those documents here in January, and then begin to file in February. And then April 15th is tax day, right, Ken?
April 15th is federal tax day. May 1st is Virginia tax day.
There we go. All right, we've got one last question. This will wrap us up. Can you explain a little bit of information about credit for retirement investments, or would that be included in one of those publications we have?
There's so many. It depends on what the retirement investment is. If there's a saver's credit, which I forgot to put on our list of credits, but software, you should look to see what income thresholds are for the saver's credit. I think that's a great credit to get people started off with retirement and starting out their own IRAs. And it's highly recommended. If you qualify for that, please do it.
Yep, and so go use your software system, go back and check out the publication 501 from the IRS, which should be updated soon for 2020, and get your folder prepared. Okay. Well, thank you everybody for joining us. Ken, thank you for all that wonderful information and this great handout that everybody now has to take home and use. And thank you all of our viewers for joining us. If you'd like to learn more about Loudoun Habitat for Humanity or our Tools for Life Learning Center and our upcoming workshops, go ahead and check out our website, which you'll see in the chat box as well as on the screen right here. We've got some great workshops coming up. On January 21st, we've got someone joining us who will be presenting on red flags in the home inspection process. So if you or somebody you know is getting ready to purchase a house or sell a house and they need a home inspection done, this would be a great workshop for them to join in and listen on. So we will see you all on January 21st, and we look forward to seeing you all soon. Thank you and have a great rest of your day.
Thank you.